Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds at 9 o'clock with news, the Australian labour market is now shedding jobs in an unexpected development. But first, US jobless claims came in almost exactly as expected at 255,000 last week. So there are now 1.95 million people currently on these benefits. This canary metric isn't yet showing the expected labour market shift to tougher conditions though. However, American producer prices rose in January by 6% from a year ago, which was a lesser rate than December, but not the pullback markets were expecting. The annualised rate between December and January was at a more than 8% rate, however, and the most in 7 months. So inflation isn't beaten in this metric, and it maintains pressure on the Fed. Equity markets fell after this data and bond yields rose. And that is despite a very weak factory survey from the Philly Fed's Heartland manufacturing area. It was an unexpectedly sharp and deep retreat with weaker new order levels. American housing starts fell in January from a year ago and from the prior month to a 31-month low. But new building consents were unchanged from the prior month, even if they too are down steeply from a year ago. Both metrics were pretty much in line with what was expected, however. Officially, prices for new houses in China fell 1.5% in January from a year ago, but given this market is in the doldrums with few sales and low demand, it is doubtful this tells the real story. Resales are probably harder hit, with official data showing only 6 of 70 large cities recording prices the same or higher than the same month a year ago. This is unusually low for them. A private survey showed that these sales volumes fell 14%. In Australia, their labour market is wavering. It shed workers for a second month in a row in January in a sign the 9 consecutive official rate hikes are starting to bite. They were expected to record 20,000 new jobs added, but in fact they lost 11,500 jobs. Their unemployment rate rose to 3.7% from 3.5%, adding 21,900 to their jobless rolls. And global container shipping freight rates edged down again last week to take them 27% lower than the 10-year average. Bulk freight rates are in the doldrums too, now threatening all-time lows. The US Treasury 10-year yield starts today at 3.84% and up 4 basis points from yesterday. And the price of gold will open today at $1,841 an ounce, and that's up $3 from yesterday. And oil prices start today back up $1.50 at just on $79 a barrel in the US, while the international Brent price is $85.50 a barrel. And the Kiwi dollar is unchanged at 62.8 US cents. Against the Australian dollar, we're softish at 91 Australian cents, and against the euro, we're also softish at 58.7 euro cents. That means our trade-weighted index starts today back at 70.5 and marginally lower. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.